Welcome to Invest Out West podcast. I'm Nat Micken.
And I'm Kahlia Micken. We are a husband and wife team who live and invest in Western Queensland.
Join us on our journey of creating passive income through mindset, business, crypto, and property investing. Welcome to Invest Out West episode number 8.
Today we want to lead with a quote that comes from John Maxwell. He says, "I'm always doing that which I cannot do in order to learn how to do it."
Yeah, so today we want to touch a bit on the basics of crypto. Now, the crypto space can be very daunting to a lot of people who don't understand it. And when we think back to when our early days, before we actually got into crypto and started learning all about it, we realise when we go back over our notes and that now of just how little we knew. And so we wanted to do this episode just for those people who want to know a bit about it but don't know where to start. There's a lot of information out there, but that it can be daunting even taking on some of that information just because there's so much to decipher. And so a few conversations we've had recently with some different people, we still are surprised at just how little some people know about the crypto space, and even people that I would have thought would have known about it have sort of got absolutely no idea. And so another thing that has recently happened that we've experienced is somebody that's close to us recently told us that they were concerned that we were in crypto and thought that we shouldn't be in the crypto space, and we sort of were surprised about that, and we realised that the only reason that person said that is because they don't understand how the crypto game works. So we thought this would be a good opportunity to do a sort of a basic the 101 of basics in crypto sort of thing. And so we're not going to go too deep in anything. We're just sort of going to cover very basic stuff here. It's probably going to be fairly boring for those who know a fair bit about the crypto space, but for those who don't, I think this will be a fairly interesting episode. So this one's sort of going to be done by Kahlia mostly. I don't have a lot to do with the nuts and bolts, I guess you could say, of our crypto portfolio. Kahlia does the buying and the selling and all that, and putting it on the storage and all that sort of thing. Whereas I sort of do the behind the scenes, I guess you could say, of doing the research on the different coins and the different projects. And working out what would be a good investment, and then after a fair bit of research, I'll then say to Kahlia, I think we need to get into this coin or this project, and then that's when she'll take over and actually do the buying and the storing of those coins. So, Kahlia, what did you want to talk about first?
So the first line that I wanted to lead with is one that our crypto coaches constantly say. They say crypto is simple, but it's not easy. That's a bit of that line has a bit of a twist within itself. That it's simple, but it's not easy, and it is a learning process, and it is a journey. Did you want to expand on that a little, Nat?
Yeah. In the book, the $1 million fast lane that I have mentioned before that I'm listening to on audio, I have recently got to the part in that book where it talks about the barrier to entry and the level of difficulty in entering a new venture, and the more difficult it is, then the more money there is in behind that barrier, you could say. And crypto is a bit like that, I believe, is because it's sort of difficult in the sense that it takes a lot of research and a lot of study, a lot of watching things on YouTube, doing the different courses that we do on it, listening to the podcasts. It takes all that to understand how the crypto space works, and then therefore you're able to get into crypto and do well in it. So I think that's probably. It probably relates back to that part in that book about the difficulty in entering the crypto space, or difficulty in entering any venture, and so that's why I believe that crypto is so lucrative, is because it does take a lot of what you could say knowledge and training to get into it. So yeah, I think once that you actually do the research and train, do your own training, and then you can actually do really well in the crypto space. So yeah, that's all I wanted to add on that. Yeah.
Yeah, there's a saying that goes with that, and it simply says, if it's too easy, it's too late. And that's sort of what I wanted to lead with as we branch into, a few basics around the crypto space. The first thing that I wanted to kick off with is the journey through mindset, and it all starts with our own mind. When we started our journey, we could see potential in the crypto space, but it is a deep, dark hole if you don't know what you're doing, and if you don't know, where to click or where to buy, and so we started with a course back in 2021, and yeah, the biggest focus is our mindset, and that's the first thing that we have to change, is our mindset. We have to take away all the beliefs that have been instilled within us. We know what the media likes to push, and it's so easy to get wrapped up in the hustle and bustle of the media and what the highs and lows that they want to emphasize. But we have to take that away, and we have to come back. We have to scrape all that off and come back to our own mindset, and we need to start with that. And we need to start with an open mind. We need to be willing to take out what's been embedded, all these thoughts that they're called facades over our lives. We need to scrape them away, and we need to start with a clean slate. And so when we first started on our crypto course, this was in our minds. We have to be open-minded. We have to, accept what's being said. And you realise how deeply entrenched these thoughts and these beliefs are in your mind. So we need to remove those things that are stuck in our mind to bring it in to open up the new. And once you start on this journey, it then becomes a discipline. And I just wanted to touch on discipline, because even now we are quite involved in the crypto space. Our mindset is, I look back to 2021 when we started, and the growth within our own mindset has been phenomenal. But even today, we're still hearing all the negativity and all the FUD, the fear, uncertainty, the doubt, what Nat's just touched on, people we know, who don't understand the space. All these sorts of things are still being fed into our mind. We're still hearing and seeing, but it's our discipline that blocks it, and we simply say, no, that's not for me. They don't understand. We've got a bigger picture to lean upon. So mindset is first and foremost. You have to be willing to open your mind, to understand the potential of the crypto space, to look past the word scam, because crypto space is not a scam. There's scams in the crypto space, but crypto itself is not a scam, and that's the most important thing to remember. Is that it's up to us to do all of our own due diligence, and it's up to us to take the responsibility. And if we fall into a scam, it's our own fault. It's not Joe Blogg's fault. It's our own. So that's what I wanted to lead with, and then I wanted to move into the different steps that we took when we first got into the crypto space. I've looked back through my book that I was taking notes of when we first started this course, and it blows my mind, the stuff that I was writing down. And I'm like, how did I not know this back then? To me, now, it's just general knowledge, and you feel so silly you didn't know it. But I have to take myself back to that place to understand the basics of it again, to put myself back in that position for people who don't have any understanding. So the first thing that we learned was about security. So after mindset comes security. One of the very first questions we were asked was, do you save your passwords to Google Passwords? And of course, like most people do, that's just routine, because when you're in Google, what pops up when you put a password in? Do you want to save this? And everybody clicks yes, because none of us can have enough brain space to remember our password. And so that was the first question we were asked. And I'm sure everybody should know the control that Google has over data, and over the online space in general, and so it's quite risky to save anything in the Google space. So we were advised to move into what's called a password manager. There is heaps out there on the market, but we first started with one called LastPass, and so LastPass, it has had a few glitches over the last couple of years. I'm still with LastPass. I haven't shifted away, but I have enough faith in their program. Plus, I'm pretty strict with my own passwords as it is, so I felt very secure with continuing to use LastPass, even though the media, it comes back to the media again, has had quite a bit to say about LastPass. There's another one that I use called Bitwarden. So I use both LastPass and Bitwarden. And there's others out there, just off the top of my head. There's 1Password's another one, but there is heaps out there. And what they do, they are all encrypted, and so it's all backed. And so we've got really high security. And the way a password manager works is that all I have to remember is my master password, which is quite a long, mine is a phrase as such, quite a long phrase with different numbers, different letters, different symbols, all these sorts of things all tied in together. And I put it through what's it called, like a password strength checker online, and it can tell you immediately how long it would take a computer, not a person, but a computer to crack it. And my master password was like 1,000,000 years. So it would take a computer constantly trying to crack it for 1,000,000 years before it would break through it. So that's the first place to start, is to start with a password manager. And LastPass, Bitwarden, all these ones are just simply an extension that you download to your web browser, and all you do is remember your master password, and it remembers all the rest. So every time I go now to open a new account when you need a new password, LastPass, I get it to generate the password, because all it is just it just gives me a line of up to however many characters I want. At the moment, I'm using 40 different characters across numbers, letters, symbols, across the whole lot, because that gives you really high security. And then LastPass remembers everything. It's a big database for all of my own passwords. So that's LastPass. The next one we push a lot is internet protection. And not just from a PC/computer point of view, but across all of your devices. So phones, iPads/ tablets, all these sorts of things, you need to have really good internet protection, and you need to keep it updated as well. So I personally use Trend across all of our devices. It's all linked in together. And just wanted to touch on too, because I know Trend does have a password manager, but I don't link them together. So I use Trend for my internet protection, but I use LastPass for my password protection. I keep it separate, and it's all about being diversified. And then the next thing that when you want to venture into the crypto space is to set up a crypto-only email address. So everybody says, nope, I only want one email. It keeps it simple, but it does not keep it simple. There is a site that you can enter your email address into, and it will tell you whether your email address has been caught up in a scam or not. And I don't know the exact percentage, but, for argument's sake, 99% of general emails have been caught up in a scam. You can enter it in. So when we set up our crypto accounts, we go straight to ProtonMail, which is an encrypted an encrypted email service. They offer both a free and a paid service. I have never paid for Proton. I always use a free service, and I set these up as crypto-only emails. So everything that I do in the crypto space, we have our crypto-only emails. I don't use our general run-of-the-mill email for our crypto space. It's totally separate. And I just thought I would come back to the discipline part of it again, touching on this. It comes back to discipline. Everything in crypto is crypto focused. Everything else for a business is business focused. Our email for crypto is used for crypto. I don't go and give that email out for a business job, and I don't go and use our general email for our crypto stuff. So it's all about creating the separation. And then the next thing that you have to have, it's vitally important in the world that we live in now with so many hackers going on. We see it every single day on Facebook where somebody has had their Facebook account hacked, and that is you need 2FA, so two-factor authentication. So I have an app on our phone, well, on all of our devices. Again, I use the LastPass 2FA. It's a separate app to the password manager. But everything I have 2FA across, because if they can jump in and hack your account with just using a password, when you've got 2FA across it, they have to get a code off my phone. And unless they get my phone, then they're not going to get the code. So 2FA is vitally important. And that's, like as I was saying before, that's happening in the social media space, 2FA is not a crypto specific thing. It is across the board. You should have it on everything. Yes, it's a bit of a nuisance to jump in and find the code when you want to log in, but if you want extra security, you really should have it. Like, I've got it across everything right from my across my Xero account. 2FA is on that, so every time I log in, I enter in my 2FA code just for extra security. So that's sort of what I wanted to touch on security side of things. The other thing I did have written down here is another browser called the Brave browser, and so it has come out of the crypto space as such, but it's a bit deeper. I might just leave that one there for now. The Brave browser, I might delve into that a bit deeper at some later point, but it is there for the crypto space because it does offer you some privacy and some more security. So then I wanted to move on to, I guess the next thing you have to think about is structure. So as in business structure. When we started on our crypto journey, it was quite the struggle. Because no one had really explained to us about structure and how it worked in the crypto space. And we started to delve into the journey ourselves, and all of a sudden we woke up that we were going to run into some trouble. So we spent a lot of money and a lot of time looking into structures and how all that works. It's a great big rabbit warren. I won't go too deep on it today, but I just wanted to touch on structure because I guess that was a missing link in our journey. So we started investing into the crypto space just in our own personal names, and we'd done, a significant amount before we realized that this wasn't the right way to go because of tax implications and because of asset protection implications. So I just wanted to touch on that. So if crypto is something you want to invest in, you have to put structure first. Yes, it costs a fair bit of money to set up, but if you've got a long-term vision, the setup cost means nothing when you've got a long-term vision. So I guess the thing that I would emphasize is do not go buying crypto in your personal names because you will run into strife. You'll run into huge tax bills and you have no protection. So what we've got, at the moment, we have two separate trust setups. So one is a unit trust and one is like a discretionary trust / family trust. And that's now what we buy all of our crypto assets in because you've got a lot more control over it and it's totally separate. So if somebody wants to come and sue us, because we are business people, we've got multiple businesses, if someone was to come and sue us for XYZ business, they can't touch our crypto portfolio because it's owned by a separate entity. And so it is vitally important, it's something you really have to delve into deep, and you really have to be willing to stump up the money to set it up properly. Otherwise, it'll cost you a lot more in the long run. So that's just what I want to touch on structure. So the next thing, once you sort of all set up, is when you move into the exchanges section, I guess. So exchanges, for those who have bought shares before, would totally understand how a shares exchange works. You just transfer your Australian dollars, which is called fiat, onto the exchange, and then you jump in and you say, I want to buy XYZ shares, press the button, and you wait for either the share market to open or for the shares to reach your buying price, and away it goes. So purchasing crypto is precisely the same process. There's a couple of exchanges that we use a lot, and I'll just mention them because they are easy to use, easy to set up. One of them is CoinSpot. So CoinSpot is an Australian exchange. And they are, in my experience, they are the best for setting up your purchasing entity from a trust point of view, because you do have to tick a lot more boxes when you want to purchase under a trust, because it is the next level. It is the next level structure. So. But yeah, CoinSpot is by far the easiest in Australia to set up a trust account to start buying crypto. So you set up your CoinSpot account. They follow, like, it's just a step-by-step process, and the CoinSpot team are really good to call on for support. And then when you get to the point where you want to purchase crypto, all you do is you deposit your money, you deposit your Australian dollars from your bank account into the exchange account, which is personal to you. And then you just go in and you say, I want to buy Bitcoin. You click on Bitcoin, you enter what your amount is or what your buying price is, and you click OK, and it does all the rest of it itself. So buying crypto is really, really straightforward. There is no tricks to it. It's a few clicks and away you go. It's sort of the follow-on from after you buy crypto that gets a bit more technical. And so I've written down a few exchanges that I personally use here. So Independent Reserve, CoinSpot, of course, and Kraken. The other thing to be mindful of when you are setting up your accounts with these exchanges to buy your crypto is the fees. They will always be very transparent about their fees. Often you can scroll down to the footer of their website and find a little button that says fees, and that's where you go to see what they would charge. And it changes all the time. So that's just a personal choice thing for each individual person. So now the other thing I want to touch on too before we move on, just going back to transferring your money from Australian dollars, so from fiat into a crypto exchange, is there has been massive issues with some banks blocking the transfer of Australian dollars to a crypto exchange, because what you've got to remember is that cryptocurrency is in direct competition to banks, and so the banking world do not want anything to do with crypto because they are losing their power. And this is the power of crypto, and this is why we're so passionate about the crypto space, is because it brings the power back to the people, right? The banks at the moment, they control everybody's money, and this is what has been going on with some banks in Australia, is people will go to transfer their funds, money that they own, from their bank account to a crypto exchange, and the banks will block it and they will freeze their accounts. And from a freedom perspective, that is not freedom. And so that is what crypto is going to change. There are banks, the banks that we're with, that I pull money out of to go into the crypto exchange, I have never had an issue. This is nothing that I've ever had personally, but on all of our, crypto courses or the calls that we're doing, you hear it all the time that people struggle to transfer their money onto an exchange to put it into crypto. So that's just something to be aware of. And the other thing I would say too is that when you are starting out, you don't want to race out there and transfer huge amounts of money. You want to start very, very small, very minimal, and make sure you understand the process before you delve in too deep, because you don't want to send it somewhere where you can't retrieve it and you've blown all of your your hard-earned cash, so to speak. So that's sort of leads into the next one. So security, exchanges, and then the few issues with the banks, and then you go into purchasing. So you bought your Bitcoin, it's sitting on the exchange that you bought it on. So I'll use CoinSpot as the example because I've used it before. So you jump in, bought your Bitcoin, and you've got, let's say, $100 for instance sitting on the CoinSpot exchange. So you do own that account on CoinSpot where your Bitcoin is sitting. Nobody else can touch that, but until you transfer that back onto what is called a wallet, that money is sitting on the exchange and it's in the exchange's hands. Now, the reason why I want to touch on this, because in 2020, was it 2 when the FTX collapsed? Or 2023?
No, it was the end of 2022.
Yeah, in the end of 2022, there was that big upheaval in the crypto space when it was like a domino effect. Exchanges were collapsing all around the joint. People lost, it was in hundreds of millions of dollars because they still had their funds sitting on the exchange. Once the exchange collapsed, everybody lost their money. And so this is why it's so important when you get into the crypto space that you transfer your money after you've bought them on the exchange. You transfer that back to your personal wallet. And so I'll touch on wallets in a minute, but a lot of people miss this step. A lot of people say, oh, I can go and buy Bitcoin, and they hold it on the exchange. There's a saying in crypto that says, not your keys, not your crypto. So you could have gone and bought $100,000 worth of Bitcoin, but if it's still sitting on the exchange, you are at high risk of losing that, because if that exchange collapses, because we're talking centralized exchanges here, if that exchange collapses, then you've lost your money because it collapses with the exchange. So you have to take it off the exchange and put it onto your wallet. So let's talk about wallets. Now, people get so confused by the terminology. They think wallet, what we think of, what we've always known a wallet to be, something in your hand where you can hold all your cash, your credit cards, all these sorts of things. A wallet in your hand. A wallet in the crypto space is the same concept, except it's hardware, like it's software, like it's not actually something physical that you hold in your hand as such. So there are two different classes of wallets. One is called hot wallets and one is called cold wallets. Now, hot wallets, they're called hot because they're still on the internet. Cold wallets are called cold because they are off the internet. And what your ultimate goal needs to be in the crypto space is to have everything on a cold wallet. If you have something on a hot wallet, it is still attached to the internet and it's still at risk of being hacked and still at risk of losing your assets. So hot wallets include the likes of, you may have heard these terms, MetaMask, Rabby, Exodus. These are all hot wallets because they're all software based. They all live on the internet, and they're hot, Cold wallets, on the other hand, we use two different cold wallets, ourselves. Ledger is one cold wallet and Trezor is another. There is, quite a few more cold wallets on the market out there, but they're the two that we're experienced with because that's what we use ourselves. And so when you set up wallets, whether it be hot wallets or cold wallets, it's still the same process. When you go to open an account in these wallets, you get given a code. And the code is, I've forgotten how many digits long it is, but it does change with the wallets. That code is what you call your wallet address, and that is all you can see. So Joe Blogs down the road, they can see your wallet address, but they can't see that it belongs to this particular person. And that is another reason too why banks and governments hate the crypto space, because they can't see exactly who owns what. Like, I know that I own that wallet with that number because I write it down, but the government, all they can see is a number. They can't see that it belongs to Kahlia and Nat Micken, So when you go to set up a wallet, you'll be given, you follow the prompts and you'll be given a 12 or 24 word phrase. Now that is what they call the seed phrase, and that is vitally important. Once you set up a wallet with that seed phrase, you do not want to lose that seed phrase, and you want to keep it highly, highly secure, because that is what holds, that is sort of your long-term password to whatever crypto you put onto that wallet, that seed phrase, whatever crypto you transfer to the wallet number that is attached to that seed phrase. And so a lot of people get so confused about all this, and I can totally resonate with everybody's confusion because I've been there. But once you get your head around it, you can see how vital it is, and you can see how important it is to follow the correct steps when setting up a wallet. So just for transparency's sake, like I was saying, in our cold wallets, in our hardware wallets is another term, we got our Ledger and our Trezor. The Ledger comes with a 24-word seed phrase. Trezor comes with a 12-word seed phrase. And you want to protect those seed phrases with your dear life. So you don't want to leave them laying around anywhere, because as crypto becomes more and more mainstream, everybody's going to know when they see a 24 or 12-word list of words, they know that it's going to be attached to a wallet somewhere, and they could have, huge amounts of crypto stored on them wallets. And so it's vitally important to protect that and to be so careful of where you store that. In our courses, some of the suggestions that they give us is you can split the words up. So like, you still hold the 24-word phrase, for example, but you can split it up, and you can give 3 words to Grandma Joan, and 3 words to your cousin, and 3 words to your sister. And so if you ever did lose your copy, you could go to all these people and join the dots up and get your seed phrase back. So there is, storage is very, very deep in the crypto space, and it is one of the hardest things to get your head around. But I just wanted to go back to the exchange. So once you've bought your crypto on the exchange, you have to transfer it to a wallet, and even that process is quite tricky. I won't delve into it now, but you have to know what buttons you are clicking, and you have to know what chains you are sending it on, what blockchains you are sending it on. It's quite involved, but yeah, storage is such an important part in the crypto space because, as the saying goes, not your keys, not your crypto. Now, the other thing I've got written down here as a note to mention is earlier when I started talking about this, I talked about a password manager and how vital it is to have a password manager. One of the most vital things to remember is that you never, ever, ever, ever store a seed phrase on your password manager. You never, ever, ever take a photo of your seed phrase. You never, ever, ever save it to a document on your computer, because that can still be connected to the internet. You want your seed phrases to never, ever touch the internet. Never, ever touch anything digitally, because if they do, they're at risk. Because like most people, for example, you take a photo of it, that gets uploaded to your Google Drive, to OneDrive, to Dropbox, wherever your photos get saved. Well, it's immediately online. Anybody can hack into that and see a 12-word seed phrase or 24-word seed phrase and know what it is. So never, ever, ever take anything digitally with your seed phrase. It has got to be kept totally away from the internet. Otherwise, you're putting yourself at risk. So that's a little bit about storage. I mean, we will go more into storage and into wallets and such things in a different episode. You're probably still scratching your head and totally confused by what I've said, and I totally respect that, because I can see where I was back then. But yeah, it's just a case of trying to understand how the system works to to be secured against on yourself. Now, the other thing that I wanted to touch on, moving on to, is record keeping. So our experience is that because the crypto space is relatively new, it's sort of taking the power away from governments and banks and all these sorts of things. The government hates crypto, and so therefore accountants do not like crypto either, because the government has so many different difficult boxes to tick, and because crypto isn't mainstream, there's no sort of system to it, accountants find it really hard to track and to report on. So it's up to us to keep our records really, really well, so then we can then pass them on to our accountant. And so when I started in the crypto space, I wrote every single thing down. Every time I transferred money from my bank account to my exchange, I wrote it down. I wrote a reference number. Every time I bought crypto, I wrote it down. How much? What did we pay? How much Australian dollars was it? Blah, blah, blah. The whole entire lot was written down. So then you could see exactly, the steps that you took. This is what the fee was. When you transfer it from the exchange back to your wallet, you write it down. You write how much of the fee was. You put the date on it. And so every single thing is documented. I still write everything down. Plus, I also use a program called Crypto Tax Calculator. It is a paid program that I use, and you link all of your wallets, all of your exchanges into the back of that through API connections, and that they bring in all the they sync all the transactions. It's a bit like using Xero with a bank account. It syncs all your transactions exactly the same in Crypto Tax Calculator, and then I just go through and I reconcile it all to make sure it lines up with my records that I've got written down. And then once it's in Crypto Tax Calculator, and it comes to the end of the financial year, all I do is I go in there and I print off my reports and email them to our accountant. So it's really straightforward. That particular program has the reports that the ATO requires your accountant to have and to see and to work off. And so it makes it really straightforward. However, as I said before, it is a paid service. And then the third thing that I do, so I write it down. I've got it, with the API integrations for every transaction going into the Crypto Tax Calculator software. And the third thing that I do is I use a program, and I use this program across all of our businesses, definitely not crypto specific, but a program called Airtable, where I just log every single transaction that we do, and I have it set up so I can see an average at the bottom to say we own this many coins of that project, and this is what we paid on an average. And so it's got it all listed there for quick reference. So I've got record points everywhere we go. So people, like our accountants, the ATO, if they come back with any questions, I can flick straight to it and say, this is how it worked, this is what we did, blah, blah, blah. And so, that's what I wanted to touch on record keeping, and I guess the main thing to reiterate is to write it down. And I guess too, I should touch on the fact that we aren't crypto traders. There's a difference between a crypto trader and a crypto investor. We are crypto investors. We have a buy and hold strategy. We don't trade crypto. So when you're in the trading space, there's a lot more transactions, of course, because you're buying and selling all the time. Whereas when you're in the investor space, it's just simply buying and holding and selling if you need to, and having sort of target points that you meet, not transacting all the time. And the other thing too, why I'm so pedantic about record keeping, is the government views every single transaction you do in the crypto space as a taxable event. So whether you're buying crypto, selling crypto, swapping between cryptos, whatever it looks like, it is a taxable event in the ATO's eyes. So it's vital to keep records, and especially at this point in the crypto space, because it is still a growing industry. Now, last but not least, I wanted to touch on this morning is simply just research. As Nat said earlier in the show, I do all this behind the scenes, like all the nuts and bolts was the word he used. I do all the nuts and bolts of this, and he does behind the scenes. So Nat does a lot of the research. And I guess, I mean, I look at crypto too, but I don't become involved in the whole, I don't become emotionally involved in it as such. Nat can tell you what the cryptos are doing more than what I can. I can tell you how to buy it and how to store it and how to swap it and stake it and all these sorts of different things. But there's two research platforms that we use a lot. One is called CoinGecko, which you would have heard Nat quote a lot on these podcasts. That's where he goes mostly to look at the prices of the cryptocurrencies that he's looking at buying, or he's researching, or whatever that looks like. And same, the other one is called CoinMarketCap. So same story. It just shows you the prices. So CoinGecko, CoinMarketCap, there's heaps more out there, but they're just the two quick and easy go-tos. Sort of the same concept as when you would look at a shares price. So if you were to go to the ASX site and look at the list of the shares and the prices that they are for, that's exactly what CoinGecko and CoinMarketCap looks like. Shows you today's price. It shows you the up and down percentage over 24 hours, 1 day, 7 days, a month, and all time, and these sorts of things. So you can get a really good view on what you're looking at, and it really adds to your research. So I think that's all that I wanted to cover. I've tried to keep it as a back to basics sort of thing. I hope I haven't delved too deep because I've been trying to put myself into my shoes where we were, in 2021. But yeah, I just sort of hope that I've opened your mind a little bit to sort of try and, join the dots up about how you take that first step, how you open that door into the crypto. And I'll just reiterate again, the first step is your mindset, and then it starts with security, and then it flows from there. So before I pass back to Nat, I just wanted to say too that if you have any questions of what I've touched on here, I'd love for you to get in touch, because I'm more than happy to take you through the way that I see things and expand a little bit more if I haven't made sense in certain areas. So yeah, I'll just back to basics, a bit of a rundown. Did you want to have anything more to add to that?
Yeah, no, that was really good, what you've just done there. I was just going to talk a little bit more about the CoinGecko and CoinMarketCap sites. My favourite is CoinGecko, and I just usually once a day, if not once every second day, I'll just go into CoinGecko and just have a quick flick through the top coins. Now they're listed in order of market capitalization. And it starts always with Bitcoin and then runs into Ethereum and goes down from there, whatever the top performers are at the time, and that's sort of fairly stable. It always goes Bitcoin first, and then runs down the list from there on. Without getting into too much depth, I just sort of without getting into too much depth for this podcast, I just wanted to sort of mention a little bit about what I look for in a particular coin. So on CoinGecko, you've got the price per coin, and then you've got the what it's done in the last hour, the last 24 hours, and the last 7 days. And so if you just always I'll just put a bit of a comparison between a few different coins and their performance in the last 24 hours. Usually, sort of look at. I usually like to look at about the top 10 or the top 15, and that gives you a really good indication of what the crypto market is doing. Whatever Bitcoin's doing, most of the other coins are doing to a certain extent. So you can get an idea of what Bitcoin is doing, and then that will tell you roughly what the other coins are doing. But that doesn't always follow exactly. Like every coin's always independent to its own a certain extent. So that's sort of just what I wanted to touch on there. Probably the top 50 coins that's listed down to number 50 on the likes of CoinGecko is sort of what you would consider blue chip sort of coins, and they're like, this isn't financial advice, but they're a fairly sure investment, but they aren't going to do the big numbers that some of the more riskier coins will do sort of in the next cycle sort of thing. So it's a case of, I always try to put in a fairly good amount of what you'd call secure coins, blue chip coins, and then mix it up with some more riskier sort of stuff that actually do the big numbers. The likes of sort of in that top 10 range, top 5 to top 10, like them coins in a cycle they can do anything from like a 2x to about a 10x if you're lucky, whereas from number 50 down, well, that's where where you can look at coins doing anything from like a 50x to a 500x sort of thing. So without getting into too much detail in that's just what I wanted to mention, what I look for when purchasing coins. So that's probably about all we need to put into this podcast for the time being. Did you have anything more you wanted to add?
Yeah, just a reminder about that quote that I said back at the start. If it's easy, it's too late. And just a reminder to never let the overwhelm beat you as such, to take your time as you move through the process. We don't know everything at the drop of a hat. It is a process we all go through, and we all learn at our own rate. There's another saying that I really love, and I pull from it all the time across every different thing that we're doing, and it simply says, overwhelm is the opportunity. And so if you can keep that in the back of your mind, that if you're feeling overwhelmed, then there's definitely the opportunity there, because at the end of the day, if it's too easy, it's too late. And so you have to be willing to keep pushing through, take your time. And I guess the other thing is to allow the time to do it. Don't think you're going to sit down and learn all this in a 10-minute session. It doesn't work like that. And even when you move right into setting up your hardware wallets and that, take your time, because if you make a mistake, at the end of the day, you're the one responsible. And just a closing point too, Nat's already mentioned it, but everything we touch on here is simply not financial advice. We just want to share this from an education point of view only, and just to sort of share our thoughts, to broaden people's mind, to open up and to allow people to see the opportunity that's out there. So yeah, definitely not financial advice, just simply here for encouragement and education.
Yeah, no, that's good. That's a good way to finish up and keep living the dream.